Hello traders, this is the midweek market focus of the 5th of December 2012. Right, I've got my charts opened up. I'm gonna scan through the market on FX and then I'm gonna move on to stocks, and I'm gonna have a quick look at indices and commodities as well if we have time. Right. First of all, I always like to have my 4 charts so that I can look for time frame agreement. I've got my daily chart down here, the 4 hourly, the 60 and the 5 minutes. For those of you who are trading snipers, today's been a great day on snipers here in euro versus dollar, and as you can see, price action is above the 50 moving average on the daily chart. Is also above on the 4 hourly chart and on the 60 minute. The momentum on the 60 minute is pretty solid. It's just been going up, making high highs and high lows. We had a massive run on the daily chart. Now if you go onto the 5 minute time frame, and that's been today, and basically this is the Asian market. It's been just going flat on the Asian market, so I will ignore these triggers down here because price action is not making higher highs and higher lows. Alright, and now basically I'll be looking for a breakout of this zone, of this consolidation here. We finally had a breakout here, and it made a higher high, right? So that's the first higher high, and it pulls back down and it gives an entry here for a sniper, 20 up and 20 down. So the stop loss is going to be down here, 20 pips, and the target is going to be there, 20 pips. We can put so now that's the 50 moving average. We take it as it touches the 50 moving average. The entry point was 1.3057, and right, so we take it from there, and higher highs and higher lows. It doesn't give us the 20 pips on the first bounce. We get it on the next bounce, right? For those of you who missed that one there, that was at 7:35 in the morning, which is when the market is starting to kick in, the London session. And just after the Australasian market, and it goes up from there, and it actually goes up. It gives you the 20 pips on the second bounce, pulls back down, and as I said, for those of you who missed this entry here, you can take it there again. All right, so you take it, can take it there. Now that's the entry point. It pulls back up to here. Let's see if it gives you the number of pips. 20 pips is there, and 20 pips down is there. Let me remove this one here, out and out. So we had the first winning trade, that one or that one. You cannot take both of them because this one didn't actually give you the 20 pips, so you have to wait for the next bounce. So we take it there, and on the first bounce within 25 minutes or so it gives you the 20 pips. Now it pulls back down. You don't have to wait for an arrow there to take it. You can just take it even though there is no arrow. And yeah, I mean, you can just take it there. And I would have taken that one there. I wouldn't have taken this one here because it's not making higher highs and higher lows. So that I would like to see this high higher than this high, and then you can take it back. So like that one there, higher high, and then you can take it. Yeah, higher high, higher low. You can take it here. Straight up. This one is breaking through. Now that's the next bounce behind this level here, and we've got an arrow pointing up. It's making higher highs. Can take it there, and it goes up. So we have several snipers here pushing up, and another one there, and another one there. This is already running out of steam. Look at look at the retracement. It's like a shallow retracement. It's pulling back down, and we can kind of see that it's gonna break through this time because the momentum is building up here nicely, and then at some point it's pushing down, and it's running out of steam. You can see it on the 60-minute that it's overstretched. Obviously on the daily chart it's massively overstretched as well. I'm gonna show you that in a minute. So it's pulling back down, and now it's giving you some other triggers there. Now 5 minutes ago, well actually, yeah, this bar gave an entry there. There's an arrow there pointing up. This high is not higher than that high, so we ignore it. And also it's 8:25 in the evening, so I will definitely ignore it. All right. Okay, you guys are gonna watch this video tomorrow, within 24 hours from now, just for you to know. Right, so this high is not higher than that high. I'm gonna ignore that one. All right, because I like to see clear high highs and high lows, and also we had like 3, 4, 5% up on the euro dollar going up. That will do. All right, that will do for the day. Remember, you normally get the first bounce is very powerful, second bounce is very powerful as well, then the third bounce is less likely. Yeah, so we have 1, 2, 3, then we have another bounce there. It's less likely, this is less likely, and it gets very unlikely, and it's just less likely and less likely as it goes, and eventually it goes down. Right, now it's giving another entry. Well, as I said, we're going to ignore that. I'm looking to trade in the London session, so it's from 6:30 in the morning, from let's call it from 6:45 all the way to 11ish, 12, and then on the US session from 1:30 to 4:30 or so. So basically from 7 to 4:30, right? That's when the market is moving. If the market is going flat, this strategy it just doesn't work. It only works when it's moving like that, when it's cycling upwards or downwards. Also, I like to add the linear regression for those of you who are not familiar with it. The settings are 50 and 2. Change the colors and make the lines a bit thicker. Click OK. And yeah, it's making, just follow, right, if it's all green, these lines, they also have to be pushing up as well, so you need a confirmation. So what you can do as well is to go back to here and then click on play. Let me take this out, and this out as well. So right, that was the consolidation there. And yeah, now it's making high highs and high lows. There was a trade there, and now you can, as long as this channel is going up, you can take all the snipers coming. And some people, what they do, they take a sniper, and they take another one, and they take another one. So winning trade, winning trade, winning trade, and they take another one, and they're gonna take the snipers until they get stopped out. Once they have the first losing trade, then they stop. So basically, you're gonna have, let's say you have 4 winning trades in a row, then the next one is a losing trade, so you give it back, so you end up 3% up. Okay, and also on that fourth one, you can actually kind of figure out that one is not gonna go. I'm gonna show you now in a minute. And maybe it's making high highs and high lows. It's coming up now. Now you can kind of see that it's gonna be running out of steam now in a minute, and that's the one that I wouldn't. Well, let's say if you've taken it there, I'll be looking to come out at break even. So at least you're not gonna give it back, right? Which is that's the one. That's what we take it here. You see that it's broken through. The stop loss was 20 pips there, so we're still fine. Then it pulls back up, and I'm looking to come out break even at the first opportunity. So the first chance that it gives me my break-even level, I'm out there. I'm looking to come out there. I don't care if it shoots up. I just don't like the setup. I'm out, right? I had a few winning trades there. I don't want to give it back. So the first chance I can come out from it, I just close the trade and close. Yes, that's it. Close the position, right? Cool. Now let's go on to the 60-minute time frame, and you can see that the momentum is pretty solid going upwards. That's the one there, like that. Alright, and now we can copy and paste it. There we go. That's the momentum going upwards, making high highs and high lows. If you want to have a closer view, we can look for this channel as well, which would be this one here. Alright. There we go. That is the channel going upwards. Yeah, it has to be from here, from where the 50 MA is, like that. So now if you go into the daily chart, and it actually went up to the 131 level, right, which is at the real top for the past couple of months, and there is a big level here. So now what I'm seeing here is that this is due for a pullback. The sooner or later it's going to be pulling back down to the 50 moving average, because it cannot go up on a straight line, right? It goes up and then pulls back down, over a stretch, pulls back down, over a stretch, pulls back up, over a stretch, pulls back up. So the sooner or later it's going to be pulling back down, right? It's going to be pulling back down at least to the 50 moving average. Now if you go into cable, we have a very similar setup. This high testing now at a massive drop to the downside, and look at this high test bar. Look what happened after. It drops down massively. Now that was high testing like 2 hours ago, and still a bit of a price rejection of this level here. And if we put a level there and go back in time, you see that there is more than one touch at this price here. Alright, there we go. Got a few nice touches there. So now we click on the white arrow, we go back to the latest price, and I'll make it a bit bigger. And alright, so now if there is a high test bar, for those of you who are trading end of day, it might be a good opportunity to sell it if it ends up being a massive high test bar there. Entry below the low, stop loss above the high, and it can easily drop down to the 50 MA, again even further down to this low. And now on the 60-minute it's done a pullback. That was when it was high testing, and then it's kind of bouncing. Well, it didn't really touch it, but it was kind of bouncing off the 50 moving average and going back up again. Now during the night normally the market goes flat, so I would say on the 5 minutes it's just gonna be cycling. It's just gonna be going sideways, right? Also got a few good cycles there, going up, and then now it's just gonna be going flat until it kicks in tomorrow again. Right, we'll ignore these snipers here. That one there, well, it's a bit higher. It's not that clear. There's a higher high. For those of you who take that one as a higher high, can take this trade here, and it goes up. Now this is running out of steam. So even if you take that one there, because obviously you don't see this bit here, you don't see that bit when you're taking the trade there. And as you see, that is not shooting up, and it's giving you the whole move there that we want, the phase 1 and phase 2. As you see that is just going flat, and you can come out from the trade, a break even, or get a few pips from the market and come out. Alright, because it's not making high highs and high lows. There is a big level up here. It's acting as a resistance in the market. It's the ceiling of the house. It's not breaking through, so I'll be looking to come out. right? If you take it here, and that's 20 pips, but I don't think it hit the target because that is just a spike. So the price wasn't actually trading at that level up there. And you probably see on your ETX platform that it went up 18 or 19 pips or so, which didn't actually reach the target. And so now, as you see, that it went up all the way up to here, came back down. It's messing about. It's not respecting the 50 moving average. I'm looking to come out at the next best price, which is at the top, right? Because we're going long. So I'm looking to come out there, and that's it. And then it just reverses. Well, even here, I'm looking to come out there as well. And because I see that this is the first high that doesn't take the previous high out, right? So it doesn't take the previous high out. This one here pulls back down, breaks through the 50, goes up. I'm looking to come out anywhere here, out of the trade, because I don't like it. And I don't like to risk my money on trades that are not very clear. Okay, so now let's move on. Japanese yen. There we go. That's pulling back down, pretty expected. Remember, phase 1, phase 2. It's like if you stretch a elastic band, the more you stretch it, the more it's going to pull back down. So there it is. It's already pulling back down, right? It's like here, over a stretch, pulls back. Over a stretch, pulls back. Yeah. Phase 1, phase 2, phase 1, phase 2. This is the retracement, a pull back down to the 50 moving average. So look for opportunities down here and then back up again. Okay, which I'm going to take this away in terms of the Fibonacci levels. We pick the swing low to the swing high. That'd be a nice pull back down to the, let's say, the 50 fib level, or the 618 level, or the 78 level. Is a bit too much. I wouldn't like the price action bouncing off this level here, because it's just too low. So I'm going to take this away and this away. But if it's bouncing off the 618, which is also bouncing off the 50 moving average, and also is on this level here where resistance is becoming support, happy days. That's a good call. And also there are a few more touches here and there as well. Alright? Especially in this bit here. So there, and there as well. And then you have the 50, the 618, and the, yeah, basically the resistance becoming support, right, which is very powerful. And then the end of phase 2. And if you get a low test bar there, brilliant. Back up again. If it doesn't bounce off this level, then it can bounce off the 50 feet level, which is not bad level at all. And it can just go from there. Alright, I'm going to take all this away. Out and out. So look for trend continuation on all the yen pairs. And I mean all the yen pairs, euro yen, long pound yen, long Swiss yen, long cat yen, long as well. So wait for pullbacks and then back up again. And right, we're gonna go on to, let's see what's key. We're doing nothing there at all. Aussie got a big buy about today. It hasn't been doing much, to be honest. It's a bit of a level here, going up, making high highs and high lows. It's making a bit of a ascending triangle. Price action is consolidating up here at the top. And what else we've got? Now if we go on to Euro Pound, and we see this chart here is the real top now. So it's at the top. I'm gonna put a trend line here. Minimum 3 touches. We've got 1, 2, and 3, and now we've got another level up here, which price action is approaching to this level here in this moment in time, and it's also on a rounded figure. It's the 8150 level. It's not too far away. So when it reaches that level, the likelihood of bouncing of it is greater than not. So you can pull back up to this level, sorry, you can go up to this level and then pull back down to the 50 and to the bottom bit of the triangle, the ascending triangle. Right, okay. Now I'm gonna go on to gonna have a look at stocks now. Let me see, I've got the page. FTSE 350 power plays. There we go. Right, I want to show you HSBC. It's a trade I've taken myself. HSBA-LON. I believe it was. Yeah, that's HSBC. It's making higher highs and higher lows. All banks, they're all been trading upwards. And we've got a trend line here making higher highs and higher lows. Got the other level there. That was a beautiful trade. Alright, that was just one of those that you like to see moving. So you enter here, stop loss below the low of the bar. The stop loss was very close to get stopped out, and then it kicked in. Right, that's the phase 2 and phase 1. So phase 1 with the trend, phase 2 against the trend, phase 1 with the trend, phase 2 against the trend. If you're looking to trade, well, for continuations, you're looking to buy right at the bottom, anywhere in this area here. So you're looking to buy here, there. All right. So wait for a pullback and look for a low test bar bouncing off the 50 moving average when phase 2 finish and phase 1 is just about to kick in. Off it goes. Phase 1 again, right? Make sure you trade the stop loss, follow the rules, whichever strategy you're using. Could be on a power play, then you have to trade the stop loss after 5 days. It could be on a 20 bounce, and so on, right? So make sure whichever strategy you're using, follow it. And yeah, just stick to the rules, stick to the trading plan. All professional traders, they all need a trading plan in place. And that's the way forward, right? Phase 1, phase 2, phase 1, phase 2, and so on. So the trend is your friend, as we all know, until it bends to an end. Just stick to the trend, stick to the channel. Once it's broken, let's say it does that. Let's say it does that for argument's sake, that, and then that. That's it. There's no more trend. Who knows what is going to happen next? Can go down, can go up. There is no more trend. So there's no technical analysis there. Now we're going to be looking for a new trend. So we might have a new trend pushing down like that. Okay. And then we're going to be looking for lower highs and lower lows. And then when it pulls back up to here, we're looking to sell in the selling zone, which is anywhere in this area. Anywhere in this area here, we make money as it goes down. Here, we make money as it goes up. This is the buying zone. This is the selling zone. Assuming that the price action is following the arrows. Great. Let's move on. Show constituent. Okay, let's go on to the power play setups. Long. We've got quite a few there actually. Wow, even some of the mining companies as well, like Strata. Quite a few there. Ladbrokes as well. JP Morgan, Asia Investments, Croda, Chemicals. Right. Nothing there. Next one. Croda. Nothing there. Next one. Nothing there. Next one. Nothing there. It's not making high highs and high lows. It is going up, but it's not very clear, is it? Unless you're looking for this kind of move like that. And you're looking for this move like that, possibly. Well, yeah, not really clear. And the better ones out there, I have to say. There are much better ones out there. Right, next one. Massive bar that we got here. Swings are not very clear. really, it's not a clear cycle, that one there. So move on, next one. Right, that's better. That was a good call. Lowest bar of the 50 moving average. Beautiful. Put a trend line. There we go. Right, high highs and lows. Low. Actually, it's a doji bar. Yeah, it's a doji bar. It's a doji bar. Next bar doesn't really take the previous high out. Fine, but the next bar does take the high out. So, well, it depends. Well, it's a bit higher actually. So what you can do at this moment in time is to check this box here, right? I'm gonna put a box here. I'm gonna put a cursor on top of the massive doji bar that we have here, bouncing off the trend line and the 50 moving average, and the high is this figure here, right? So I'm gonna put a cursor on top of the bar. The high is 342.39, and the next bar 3.2. 342.39, and the next bar 342.89. So yeah, it's like half a pip higher or so. So if your entry was 1 pip above the high of the bar, obviously it didn't get triggered. If it was half a pip, then you have to check with the broker and see whether you got triggered or not. I'm gonna put this box back here again. If not, you have to cancel it. For those of you who still want to take it, you can leave the entry there at the same price, and obviously leave the stop loss below the low of the bar, which is below the 50 MA and below the trend line, and then you're looking to take it all the way up to here. Alright, so that was a good trade. Next one, and then just try the stop loss. Follow the rules from there. Try the stop loss. Okay, let me go back here 1 second, just finish off here. Okay, got trigger in there. So 1, 2, 3, 4, 5, stop loss there on a power play, and then trail it on a day-to-day basis until we get stopped out. Okay. As a 50 bounce, well, depends on your rules for trading the stop loss, really. Right, and the next one. Going up, bouncing on the 20, almost touching it. Wow. Right, I want to see if it's making historical high, so I'm going to click on comma and then M and then enter. And no, there is a higher. There's a higher level in 2006, before the recession, before the massive move down. So it's up there now. We got 2 big months, and now it's pulling back down slightly. I'm gonna go back to the daily chart. I'm gonna click on comma and then D and then enter, and I'm gonna go on to the next one, the humps. It is making high highs, high lows. This swing high is not taking this swing high out. I'm gonna leave it alone. Nothing there. Don't like the chart like that. Nothing there. Wait for a pullback and look for opportunities on the 20 MA or the 50. So look for this kind of move. Like that. This is due for a pullback now. If you look at the stochastic, is hooking back down. Next one. Yeah, for a breakout, you need more touches here. For a breakout, for a breakout, you need many more touches off the level, and then you're looking for a breakout, and then it goes. Alright? So resistance, breakthrough, support, goes. That's a good level. Strata. Wow, that's a massive spike. And yeah, it's going up overall. Good. This is great. Yeah, had a massive drop. Oh, now it's catching up again. All the moving averages are all angling upwards, which is good. So look for long opportunities. I was giving you, well, first of all, we need a high. I have to take these highs out, then it has to pull back down, and then look for bounces of the 20 or the 50. Next one. Level there, not great, double top. Next one. Look for pullbacks, and then look for long opportunities. Next one. And it's not cycling upwards. Next one. Look for pullbacks of the 20 and buy on a 20 bounce. Look for a pullback like that. Alright, of the 20 bounce, 20 bounce. Lot of noise. Hopefully another 20. Well, if it touches low test of the 20, that'll be a good opportunity there. Enter of the high. Well, for a 20 bounce, you enter on the line. Actually, if it's a power play, enter above the high, stop loss below the low. Next one. Oh, had a massive drop down. I don't like these massive bars when I'm looking for opportunities. I like to see clear cycles. I don't like gaps neither. Like that one there. That's a very small gap. That's a gap. That is a gap as well. So basically look for clear charts. Alright? Put your money on clear charts. Now the FTSE 100 is right at the top at the moment. This is due for a pullback now, although keep an eye on Christmas rallies. Right? All the companies want to close the year nicely. Normally, well, basically the dollar index goes down, then equities goes up, especially US stocks goes up because they want to close the year nicely in profit. So that is known as the as Christmas rallies. So watch out for those. This Friday is the non-farm payrolls, so stay away from the market. And on Friday, as it's the biggest announcement in the financial markets. And right, that's pretty much everything. Stay focused. And I'm gonna be doing the next midweek market focus. I'll try to cover as much as I can so it suits everyone's style. I'm gonna be doing forex, bit of indices, stocks. I'll try to do half and half, so then everyone can benefit from the video and learn a little bit here and there. And the key is to grab a few bits and bobs every time, so then we'll all learn from the midweek market focus, which is the purpose of it. Alright, so I hope you all guys enjoy the video, and I'll catch you all soon. Cheers, bye now.